So the price of Bitcoin has fluctuated pretty markedly over the last year. So if you take a look here, 1 year ago, one Bitcoin, the price was about $1,193. After that, the price soars to $19,194, and as of this morning, just $6,803. So the price of Bitcoin has fluctuated a lot over the last year, and naturally, many folks are left kind of scratching their heads. What is this Bitcoin thing? Why is it valuable at all? And why has its price fluctuated so much over the last year? So those are the three big questions that I want to help you tackle today, and hopefully when you leave you'll have a better sense of what's going on here. So let's start with the first one. What is Bitcoin? Bitcoin is an unbacked digital currency, right, that allows you to make and receive payments over the internet, and it uses what's called a distributed network to process transactions. So we'll break that down into parts. First, it's an unbacked digital currency. What do we mean by unbacked? Well, that means that it's not redeemable for anything else. It's not redeemable for some underlying commodity, say. So if we were to go back maybe 120 years here in the US, and we were to look at the banknotes that we were using, those banknotes were actually redeemable claims to gold or to silver. And so if you took that banknote back to the bank of issue, they were contractually obligated to hand over the underlying commodity, the amount of gold or silver that was backing that note. Today, of course, most of the monies we use are unbacked. Dollars, euros, yens, these aren't redeemable claims for anything. They're unbacked monies. And so that means that Bitcoin, as an unbacked digital money, is a lot like the monies that we're used to using, dollars, euros. It's not redeemable for anything else. It's only worth what other people will hand over for it. There's no contractual obligation to redeem for some underlying asset. All right, so it's unbacked. It's also digital. Now, I know what you're thinking. Look, we can see some physical Bitcoins here in the back of this slide, right? How is it that this guy's telling me it's digital and yet there are these physical coins? So these coins aren't actually Bitcoins. They're actually tokens. And if you look closely, you'll see that there's a holographic seal there you can see on some of those coins. And if you were to peel back that holographic seal, there's a digital address where the balance of Bitcoin is located. Now, should you ever come in contact with one of these coins, don't peel back the holographic seal. Because if you were to peel back the holographic seal, then you know the address where that balance of Bitcoin is located. And now anyone you would want to hand that coin off to knows that you knew the address and could have potentially transferred that balance of Bitcoin to someone else. In fact, I doubt any of you will ever come in contact with one of these physical coins because they're pretty rare. Most people who are interested in Bitcoin don't actually use these coins because it's digital. The whole point of Bitcoin is that you can make digital transactions. Okay, so we're about halfway through here. It's unbacked, it's digital. That means it allows you to make and receive transactions over the internet. This last part, distributed clearing process. What's that all about? Well, we're going to table that for just a second. That's what's most interesting about Bitcoin, actually. And we'll say one more thing before we move on. Maybe you're thinking, wait, if Bitcoin is worth $6,000, how is it useful to make payments for anything? Right? You're not making $6,000 payments every day. But you've got to keep in mind that it's actually divisible to 8 decimal places. The smallest unit there is called a Satoshi. And so actually, if you wanted to, you could make even smaller payments than you can make with the dollar. So you can send a fraction of a Bitcoin, a very small fraction, in fact, a Satoshi. All right, let's get back to that distributed clearing process. So what's going on there? Before we explain the distributed clearing process, let's just get a sense of why we need a clearing process. So you, sir, what's your name? Patrick. So let's suppose that I wanted to say, purchase some nice wool socks from you. I'm from Ohio, so wool socks come in handy. And let's suppose we want to make a cash transaction. Now, cash has some very desirable features. It's physical. And so if I make a cash transaction, Patrick can see me pull that balance of cash out of my pocket. And when I hand him that balance of cash, he can feel it leaving my hands and entering his. And importantly for the rest of you, once I relinquish ownership to that cash by giving it to Patrick, I'm not able to spend that balance of cash again. This is a decentralized clearing process. That is, this transaction between Patrick and I, it clears just between the two of us. None of the rest of you need to even know that this transaction has taken place. Now, if we're talking about digital monies, it's pretty different. So think about the latest Justin Timberlake CD. Right, so if you download an MP3 of the latest Justin Timberlake album, right, you have that digital album there. You could send me a copy of that album without relinquishing ownership to that album. And I could send that copy to someone else, and to someone else, and to someone else. That is, when we're in the digital realm, we no longer have that same kind of scarcity that we have when we're talking about transferring a physical balance of cash. That makes for a pretty terrible money. Right? That would be like a currency where I could pay Patrick and then turn around and spend the same balance to the rest of you. And so we need some way to clear this transaction. Now, traditionally, the way that we've cleared digital transactions is through a centralized clearinghouse. So, Patrick, where do you bank? Crestcom. So let's suppose that we're both customers of Crestcom. And so then, I'm kind of an old man, so I write Patrick a check. What does our bank do? Well, our bank debits my account and credits his account. That is, they first ensure that I have this balance of funds to transfer. Then they take that out of my balance and out of my account and put it into Patrick's. And most importantly, they ensure that I do not spend that balance again. Right? They require that I relinquish ownership of those funds. Now, I bank at Chase. But it turns out that much the same thing happens if I write you a check from Chase. It's no longer happening at our bank level. Instead, it happens one level up at the interbank clearing system. So maybe the clearinghouse interbank payment system or FedWire, right? But that central clearinghouse just debits Chase's account and credits Crestcom's account, right? It acts as the central clearinghouse that makes sure that that balance doesn't get double spent. Okay, back to Bitcoin. What's so interesting about Bitcoin is the way in which it processes transactions. It's not decentralized, right? It's not like these tiny nodes operating together without concern for anyone else. It's also not centralized. It doesn't rely on some trusted third party like a bank or a clearinghouse to process transactions. Instead, it processes transactions over a distributed network, right? That is, the entire network updates to reflect the fact that my account has been debited and Patrick's has been credited. Let's say a bit more about that. So at the core of Bitcoin is what's called the blockchain. And the blockchain is just a public ledger of all past transactions. Any transaction that has taken place in the past is reflected on this ledger. And so what happens when I make a transaction, when I send a balance to Patrick, I announce to the system that I have some Bitcoin and that I want to send that balance to his account. Right? And so a transaction is announced and it's grouped together with all the other transactions that are taking place in roughly a 10-minute window. And every computer running the Bitcoin protocol then begins racing to become the first computer to update the ledger. That is, to debit my account and credit Patrick's, to make sure that I don't spend this balance of Bitcoin again. And so it does so by trying to solve a complicated computer problem. Once it does that, right, this batch of transactions, this block, is added to the blockchain. That is, that public ledger is then updated to reflect this new batch of transactions that have taken place in the last 10 minutes. Now, it gets a little more complicated than that, actually. So we have this batch of transactions. Why is it that we have to solve this complicated computing problem? Well, the reason is because we wanted to make it random that any one of us gets to process this batch of transactions. You might imagine a system where I know that I'm going to process the next batch of transactions. Well, in that case, I might process some fraudulent transactions, some illegitimate transactions. But since we have to solve this complicated computing problem, it basically means that every single person that's running the protocol has a random probability of being the first person to crack the code, with that random probability equal to the proportion of computing power that that person is contributing relative to the computing power on the system. And so as long as no one has control of a majority of the computing power on the system, then this blockchain gets updated appropriately. Now, it's a bit of a misnomer to talk about one blockchain because there are actually lots and lots of Bitcoin blockchains at any particular point in time. That is, there are competing blockchains. But the system recognizes the longest blockchain as the legitimate blockchain. And the reason it does so is because maybe I get lucky this round and happen to process a batch of transactions with an illegitimate transaction that benefits me in it. In order to make that illegitimate blockchain recognized as legitimate by the system, it's not enough just to get lucky that one time. I would have to keep getting lucky so that I'm adding blocks to the blockchain at a faster rate than the rest of the system that's competing against me. And if I don't have a majority of the computing power on the system, I'm not going to be able to do that very long. In fact, I can look at this in advance and say, it's not even in my interest to try. Because even if I were to get lucky and process an illegitimate transaction, it would be pretty quickly before this gets undone by the rest of the system. And so it's this mechanism, this mechanism that didn't exist prior to 2008 for updating a transaction ledger like this, that is what's so revolutionary about Bitcoin. Next, we want to think about why it's valuable. Why is it valuable at all? And then we'll consider why its value is fluctuated. Before we talk about why it is valuable, though, let's start by talking about two reasons that are often given for why Bitcoin's valuable that aren't especially good reasons, right? Terrible reasons for why Bitcoin is valuable. So unsatisfactory answer number one, Bitcoin is valuable because it's costly to produce. Sometimes you'll hear people say this. And there's a grain of truth here. Bitcoin is costly to produce, right? Every time a batch of transactions is processed, right, a new balance of Bitcoin is rewarded to the computer, to the person running that computer, that processes that batch of transactions. That's the first to crack that code. And so we have the creation of new Bitcoin. It happens because a batch of transactions was processed, and it's costly to process that batch of transactions. You have to use some electricity, you have to run your machine. But the Bitcoin isn't valuable because it's costly, right? In fact, that gets it exactly in reverse. Rather, it's that people are willingly incurring those costs because they believe Bitcoin is valuable. Sometimes you'll hear journalists say things like, well, medical care is expensive, doctors are expensive because they spend so much time in school, right? But again, that gets it exactly the opposite way around. Right? Rather, it's that doctors choose to spend so long in school because that they believe that the services they'll be able to provide when they're finished will command a high price, that those services are highly valued. If a plumber spent just as long in school as a doctor did, they wouldn't make the same wages as a doctor. As I tell my students, never reason from cost to value. Always reason from value to cost. In this case, Bitcoin is valuable, and that induces people to incur the electricity costs and to run their machine in order to get those new Bitcoin. All right, so that's unsatisfactory answer number one. Bitcoin is valuable because it's costly to produce. Some people will say that Bitcoin is valuable because of speculative demand. It's all just speculation. That's why Bitcoin is valuable. And again, there's a grain of truth here. Is there speculation in the market for Bitcoin? Absolutely. It would be surprising if there weren't speculation in the market for Bitcoin. But that doesn't really tell us anything, because there's always speculation in every market. Indeed, in almost everything we do, there's an element of speculation. Many of you are students. Yes? You're speculating right now. Right, think about it. You're coming to the College of Charleston, presumably so that you can earn a degree. You believe that you'll finish this in, 4 years, maybe 5 for some of you. And with that degree, you'll be able to get a job that you wouldn't have been able to get if you didn't have this degree. So you earn a higher income than if you didn't have this degree. Do you know that with absolute certainty? Do you know precisely how much more you'll be able to make with the degree with absolute certainty? No, absolutely not. Right? Rather, you're speculating. You're taking the information that's available to you at the moment and you're making your best guess about the future. Right? We do this all the time. And we have to do this all the time because to some extent the future is unknown and unknowable. And so the best we can do is take the available information and make our best guess about the future. That's what people are doing in the market for Bitcoin. Is there speculative demand? Absolutely. We don't know what the future holds, but we're making our best guess about that future. Now, to be fair, when people say that Bitcoin is valuable because of speculative demand, what they really mean is that Bitcoin is a bubble. They'll say things like, well, the price of Bitcoin shot up to $19,000. Must be a bubble. The price of Bitcoin fell to $6,000. Clearly it was a bubble. But in fact, right, we economists, we have a very precise meaning when we talk about bubbles. Right? We define a bubble as a situation where the price of an asset exceeds its fundamental value. And in those stories I just told you, the price goes up, the price comes down. We're talking a lot about price. We haven't said anything about fundamental value. Right? And so it's really hard to say whether the price is greater than or less than or equal to the fundamental value because we don't observe the fundamental value. We only observe the price. Right? Remember, Bitcoin is an unbacked digital currency. So there's not some underlying asset that we can look to see whether or not this is trading at a price above its fundamental value. And so I think this whole bubbles idea is just not very useful for thinking about Bitcoin. Right? Is there speculative demand? Absolutely. But that doesn't imply that there's a bubble. Right? And it's really difficult for us to identify if there is, in fact, a bubble. Okay, so if it's not about Bitcoin's cost, if it's not about speculative demand, why is Bitcoin valuable? Right? Bitcoin is valuable only insofar that it's useful as a medium of exchange or is expected to be useful as a medium of exchange at some point in the future. Right? It's an unbacked digital currency. It enables you to make transactions almost instantaneously, virtually anywhere around the world at a relatively low cost. If a lot of people want to do that, right, if there are a lot of people in that Bitcoin network, then it's very valuable. And if there aren't a lot of people in that network, if it's just, you know, a couple nerdy guys like me, then it's not so valuable, not very useful for making those transactions. And so that is where Bitcoin's source of value lies, as a medium of exchange, a medium through which you exchange what you have for what you want. Okay, so what makes Bitcoin unique relative to alternatives here? Well, there are some characteristics that might make Bitcoin more suitable for some transactions than existing payment mechanisms. Here are a couple. One, it's global in nature. It pays no respect to national borders. If you're working in the US and you have friends and family, say in Guatemala, you want to transfer some funds back home, some remittances, you can do that with Bitcoin. In the past, you would have to have relied on services like Western Union, and the fees associated with those services are pretty high. But since Bitcoin is global in nature, it's potentially able to make these remittances at a lower cost. Here's another one, maybe one you've heard about. Bitcoin is pseudonymous or quasi-anonymous. It enables quasi-anonymous exchange. Pseudonymous means that Your name isn't associated with your Bitcoin account. It's just a digital address, a string of characters. And so if you don't reveal any information about yourself, you don't link that string of characters to your physical identity, you can engage in some quasi-anonymous exchange. Now, this is certainly superior to some existing digital payments that we have. So I'm from southern Ohio, actually. And in Cincinnati, we had a very respectable mayor for a period of time. Maybe you've heard of him. His name is Jerry Springer. Anyone hear of Jerry Springer? Real class act. Jerry Springer once paid a hooker with a check. Now, maybe you're wondering, how is it that I know that Jerry Springer paid a hooker with a check? And I'll tell you, because he paid her with a check. It turns out that there's nothing pseudonymous about that, right? If at any point in the future someone finds out about this transaction, you can just go back to the bank, that is that trusted third party, and verify that in fact a payment was made, and a payment was made. And so relative to traditional digital payment mechanisms that rely on a trusted third party or clearinghouse, right, this enables you to make some transactions that perhaps you weren't able to make so discreetly in the past. Now, when we think about pseudonymous exchange, oftentimes our attention turns to illicit transactions or black market transactions, illegal transactions. And certainly there's some of that. In the early days of Bitcoin, in 2011, a website started up called the Silk Road. And the Silk Road enabled people to make transactions for illegal goods. Most of it was pot, but other substances as well. And the only currency that you could use on the Silk Road was Bitcoin. And so that got a lot of attention. The founder of the Silk Road, Ross William Albrecht, is currently in prison. And so that's why we say pseudonymous and not anonymous, right? Because his identity was compromised. His Bitcoin accounts were seized by the US Marshal Service. And so it's not perfectly anonymous by any stretch. I want to say a couple things about this whole crime element, though. Because for one, I think this gets a little more attention than it deserves. So another story from Ohio. A few months ago, there was a big case, and the headline, it was in Toledo, so the headline in the Toledo Blade was, local man sells fake IDs for Bitcoin. Right? And that's like a sexy headline, right? You're like, whoa, local man sells fake IDs for Bitcoin. Here's a headline you would have never seen. Local man sells fake IDs for dollars. If you saw that headline, you would just think, you mean local man sells fake IDs? Right? That is, we don't report every time dollars are used in illicit transactions. But if Bitcoins are used in illicit transactions, then right, that's hitting the headline. But we also don't see more mundane transactions, like lonely 32-year-old purchases ugly couch on Overstock with Bitcoin. Right? Like, you're not going to see that on a headline, right? And so we get a misperception about the extent to which Bitcoin is used for illicit transactions. Here's one more thing I want to say about this pseudonymous exchange. Oftentimes it's bundled up with criminal activity, but I'm going to suggest to you that there are actually some perfectly legitimate transactions where you might want a pseudonymous exchange. Now some of those are in fact criminal transactions, but they're criminal transactions that most of us would look at and say, that might be criminal, but it's not immoral. So imagine, for example, that you are a small business owner in Venezuela, and you'd like to support the opposition party. Probably not a good idea to use your checking account. Right? That could land you in prison. Right? Or maybe you want to move your wealth just beyond the reach of your terrible government. Right? Criminal. You're evading capital controls. But most of us would look at that and say, no, you're just making a sensible economic decision there. Right? That is, those are illegal acts. Right? Supporting the opposition in repressive regimes, evading capital controls. But few among us would say that those are immoral acts. Right? Rather, we would say that having access to a pseudonymous exchange mechanism, right, that would promote liberalism. Right? It would make the world a marginally freer place. Here's one that hits a little closer to home. So imagine you have a neighbor who's fallen on tough times. Maybe they've had a house fire. And you really want to help out your neighbor. But you know what it's like to have neighbors. If you help them out, that help comes with a sense of obligation. Even if you don't want to impose a sense of obligation, it's there. Your neighbor is going to feel obligated to pay you back at some point. And if you don't want that, you might want access to a pseudonymous payment mechanism so that you can send some funds in their time of need and they have no idea where those funds came from and have no obligation to pay those back. And so I think that there are some pretty sensible reasons why we might want access to a pseudonymous payment mechanism apart from illicit transactions, though illicit transactions are certainly part of that demand. All right, number 3 here, lower transaction costs. The whole promise of Bitcoin is that it's a cheaper way of processing transactions than relying on a trusted third party. Now that doesn't mean that it's always cheaper. It means that it's cheaper in some cases. In particular, in cases where you don't have access to a trusted third party. So, for example, Bitcoin is not subject to what's known as chargeback fraud. Once you send a balance of Bitcoin, the only way to get that balance back is if the person who receives it sends it back to you. Now, that means that you can't do, say, the following. Go out tonight, right? You swipe your card, you have a big steak dinner and a bunch of wine, and tomorrow you wake up and you say, oh, that was a big mistake. I really wish I hadn't spent all that money. Maybe I'll call up Visa and MasterCard and tell them that I actually didn't spend all that money. And it turns out that if you do that, your credit card company will almost always reverse the charge. Now that's terrible for the merchants. You've literally defrauded them. But it's actually even worse than that, because not only do they not get the money that you spent, but the credit card company hits them with a chargeback fee. Right? Or, for example, there are places around the world that Amazon would be happy to ship to, except that they can't trust the banking system there. That is, they can't trust that once those funds are sent, that they won't be clawed back by some crummy banking system in a developing country. And so there are some places around the world that Amazon just won't ship to. In those situations, right, you might want to have access to a payment mechanism that's not subject to chargeback fraud, right, that has some finality to the transaction. That when you send the balance, there's no risk that you're going to claw that back. Now, not in every transaction. Certainly in some transactions, we want access to be able to claw back our funds if we've been defrauded ourselves. Right? But if you aren't able to credibly commit not to defraud the merchant, your best option might be to have a payment mechanism where you're just not able to defraud the merchant. Right? Otherwise, those transactions might not take place. All right, so we have a global in scope, pseudonymous, lower transaction costs. One more. It has a supply mechanism that is predetermined. It's known in advance. From the outset, when Bitcoin was first launched, you could pick any date in the future, and within a very small margin of error, you could say precisely how many Bitcoin would be in circulation at that point in time. We can map this out. Right? So our dashed red line here is the projected Bitcoin supply. The blue line is the actual Bitcoin supply. And here's why we can do this. We can do this because that system of processing transactions which generates new Bitcoin, right, it's every 2 weeks it updates. It's actually like every 10 days. It updates. And if we're processing transactions too quickly, right, that means new Bitcoin are getting rewarded too quickly, the system actually slows down the transaction block processing time. So it makes that computing problem more difficult to solve. On the other hand, if we're not solving one block roughly every 10 minutes, right, then that computing problem actually gets easier so that we process blocks of transactions more rapidly. And so, again, roughly every 10 days, the system updates to make sure that one block gets processed every 10 minutes. Now, Every 10 minutes there's a new reward, but that reward changes over time. For the first roughly 4 years, it was 50 Bitcoin per block. For the next 4 years, it was cut in half to 25 Bitcoin per block. The following 4 years, 12.5 Bitcoin per block, and it'll keep halving roughly every 4 years into the future. And so that means that every 10 minutes, an amount of Bitcoin that we know in advance is going to enter the system. Right? For the first 4 years, 50 Bitcoin, 50 Bitcoin, 50 Bitcoin, every 10 minutes. For the next 4 years, 25 Bitcoin, 25 Bitcoin, 25 Bitcoin, every 10 minutes, right? And so on and so forth. So that's a very predictable supply. At any point in the future, you can say with confidence what the supply of Bitcoin will be. You can compare that with existing monies today. Just not possible. You can't be so confident about the supply. All right. So we have a sense of what Bitcoin is, right? It's an unbacked digital currency. It allows you to make and receive transactions on the internet. It processes transactions using that distributed network. We get a sense of why Bitcoin is valuable. It's not because it's costly to produce. It's not speculation, right? It's because it's useful as a medium of exchange, or that we expect it to be useful as a medium of exchange in the future. We have some unique characteristics there that might make it so. Finally, let's get at this last question. Why is it that the price of Bitcoin fluctuates so much? First, Bitcoin is subject to what economists call network effects. The value of Bitcoin as a medium of exchange depends on how many people are in the network. If there are a lot of people in the network, or if we expect that there will be a lot of people in the network in the future, then it's very valuable as a medium of exchange. Right? It means that you can transfer wealth to a lot of different people. On the other hand, if the network is pretty small, or we expect the network is going to stay small into the future, it's not all that useful as a medium of exchange. Right? That means we're only going to be able to transfer wealth to a handful of people. So it's not all that useful. And so we're all the time trying to estimate what that future network size is going to look like. Anything that happens that makes us think that that network size is going to be bigger, well, that means that using Bitcoin as a medium of exchange is more valuable. And so the price that we're willing to pay for Bitcoin today goes up. So we bid the price up today. On the other hand, anything that happens that makes us think that that future network size is going to be smaller, right? Well, if it's going to be smaller, that means that it's not going to be so useful as a medium of exchange. And so we're not willing to pay as much for it today. We bid the price down. And so all the time, we're being hit with new information which causes us to revise our beliefs about this future network size of Bitcoin. All right, let's talk about a couple features here that are especially important when we're trying to estimate this network size. So the first is that there's no government support for Bitcoin. So think about what that means. With the US dollar, right, the US government has committed to making and receiving payments in dollars. Right, so Patrick, you might imagine if tomorrow you wake up and you decide, that's it, I'm not going to accept dollars anymore. Well, that's an interesting decision, but it's not going to affect the rest of us at all. Right? Because the dollar network is a big network. Patrick, just one guy. Right? There's a core base of users for the dollar. Right? The government is going to use dollars. People making direct transactions with the government, they're going to use dollars. And so that means that the network size of the dollar, right, there's only so far that it's going to shrink. Right? In fact, that confidence in that core group, or our confidence in that core group of users, make us more comfortable using the dollar. And so it has a relatively stable source of demand. That's not the case with Bitcoin. There's no core group of users that's committed to accepting Bitcoin in the same way that the US government has committed to accepting dollars. That means that the demand for Bitcoin, it could shrink to zero. Right? That's a big difference. That's a lot of scope for variability for Bitcoin. That's just not really there when we're talking about the dollar. It's not so much scope for network size fluctuation there for the dollar. So there's no government support for Bitcoin. Now we should probably clarify here, sometimes people will say that the US government backs the dollar, that the dollar is backed by the US government. That's not technically correct. We monetary economists, we have a precise usage for that term backed. We use that to mean that it's redeemable for some underlying asset. But we've already said that Bitcoin is an unbacked digital currency, just like the US dollar is an unbacked fiat currency. Right? It's not backed by the US government, it's just supported by the US government. That is, the US government provides a stable source of demand for US dollars. It's not contractually redeemable for some underlying asset. It's actually worse than that, though, because it's not merely that there's no government support, there's also some potential for government opposition. Now, here in the US, the regulatory environment has become much clearer for Bitcoin. Certainly at the national level, the IRS finally got around to clarifying how they were going to treat Bitcoin for tax purposes. The Financial Crimes Enforcement Network under the Treasury has said that if you're going to transfer dollars to Bitcoin, if you're going to process transactions where people convert dollars to Bitcoin or Bitcoin to dollars, you have to register as a money services business. And so there's some regulatory certainty there, at least at the federal level for Bitcoin. But that's not the case around the world. Right? And just think about the range of outcomes. In Bangladesh, if you're caught using Bitcoin, you could spend 13 years in prison. 13 years in prison. I don't know about you, but when I hear that, I think, maybe I won't use Bitcoin. Right? And so we have this huge range of outcomes. Some countries are going to say, okay, no big deal, go use your Bitcoin. And others are going to say, enjoy 13 years in prison. And there are a lot of countries that haven't really decided how they're going to come down on this yet. And so all the time we're getting new information about how governments are going to deal with Bitcoin. China announced that it was going to shut down all Bitcoin exchanges in China. And so it's no longer legal in China to have a business that converts yuan to Bitcoin, Bitcoin to yuan. It's still legal to hold Bitcoin, to use Bitcoin, to send it to your friends and neighbors or make purchases, but you're just not allowed to run a business that exchanges yuan and Bitcoin. Well, that makes it a little harder to get into the Bitcoin network. And so the rest of us, we see that and we think, oh, China, big place, a lot of potential users. A little harder to get into the network. Probably the network is going to be smaller than we thought. Right? And what happens to the value of the medium of exchange use of Bitcoin if the network's going to be smaller? Well, it falls. And so what happens to the price that we're willing to pay for Bitcoin today if we think that that's going to be less useful as a medium of exchange in the future? It falls. And it did fall. Other countries, like Russia, right, technically it's legal to use Bitcoin in Russia because it's illegal to use anything other than the ruble in Russia. Right? It's baked into their constitution. The ruble is the only currency you're allowed to use for domestic transactions. But just like Russians can hold dollars or euros to make international transactions, they can hold Bitcoin to make international transactions as well. A couple years ago, there was a proposal put forward to ban Bitcoin in Russia. Now that proposal was tabled, so it doesn't look like it's going to go through, right? But there's a lot of uncertainty there. And all the time we're getting more information about the likelihood that a proposal like that goes through in a country the size of Russia. And it's not just these countries, right? All the time we're getting updated information about whether countries are going to ban Bitcoin and promote Bitcoin. And when we do, we update our beliefs about that future network size, and the price of Bitcoin fluctuates accordingly. Okay, so we have this network effects problem, which is confounded to some extent by government, no support from government, and indeed some opposition. There's also a transactions problem with Bitcoin, what folks in the Bitcoin community call a scalability problem. So at the moment, Bitcoin has a cap on the number of transactions that can be processed in a particular block. Right? That cap is 1 megabyte. And it effectively means that you can process one transaction, right, roughly every 1 to 4 seconds. That is really, really small transaction volumes. I'll give you a sense of how small that is. That's not even enough transactions to process all of the Uber transactions in the world, let alone to replace, say, Visa or MasterCard. Not even close. Right? So a very small number of transactions that the system can process. Now there's a pretty simple fix here. The fix is that you just raise the cap on the block size, and then you can put more transactions in a block and you can process more transactions. Right? But the Bitcoin system, it's not owned by any one entity. There's no one person that just makes this decision. If you want to upgrade the Bitcoin system, you have to put forward a proposal, then you have to persuade, right, a majority of users running the Bitcoin protocol, right, that they should subscribe to this update. Now, last summer there was an update. It was called Segregated Witness. And what it did was take some of that information that used to contribute to that block size cap, and it just moved it. So it's still there, but it no longer counts towards the block size cap. And that was a lot like if we had just raised the cap from, say, 1 megabyte to 1.8 megabytes. Right? But a pretty small effort. Didn't increase the transaction size very much. And so what we see is that transactions, they back up, and people start paying fees to jump the queue, and transaction fees get up to maybe $20. Right? And it takes a while before your transaction is added to the block. Right? That's not good. That's not good for the prospect of this network. Right? To date, we haven't been able to persuade a bunch of people to make the upgrades needed to solve this scalability problem. But all the time, we're getting new information about the likelihood that we solve this scalability problem. Right? Or the likelihood that people exit this network and join some other network that has solved the scalability problem. And so as our beliefs about the scalability, our ability to solve this scalability problem change, right, so too do our estimates of those future network sizes, and hence the price we're willing to pay for Bitcoin today. So we got a network effects problem, no government support, worse than that because of the regulatory ambiguity, and this scalability problem that limits the number of transactions at the moment, and it's not clear we're going to be able to solve moving forward. Okay, so where does this leave us? Right, well, we've already said that it's not so clear how we would identify if Bitcoin is a bubble or not, but we can think about the market participants at play. Right? That is, if we had a reasonable belief that Bitcoin was in fact a bubble, then you got a pretty good incentive to bid the price of that asset down. Right? Maybe it's the case that some people have some private information. They know that Bitcoin is overvalued or undervalued, but they also have an incentive to act on that information. And by acting on that information, they bid the price up or down, and in doing so, they convey that information to everyone else. It's possible that new information will become available that leads us to understand that Bitcoin is overvalued today or undervalued today. But based on the information that we have at the moment, and based on our understanding of how markets work, we don't really have a good basis to say that Bitcoin is overvalued or undervalued today. That is, the market price is the best guess that we have about the future network size of Bitcoin. Now, quick clarification. I gave this talk a couple weeks ago at the University of Kentucky, and afterwards a lady came up to me and she said, "This was great. I hadn't bought Bitcoin until now, but after hearing your talk, now I think I should." Like, no, you did not hear my talk. You would want to buy it if you were convinced that it was undervalued, but we don't have any basis to think that it's undervalued. And so I'm saying that we shouldn't expect that it's a bubble at the moment, but we also shouldn't expect that you're getting a good deal either, right? Because it's not we have no basis to say that it's overvalued. We have no basis to say that it's undervalued as well, unless we have some private information about Bitcoin. We probably shouldn't be expecting to experience some huge gain or some huge loss by buying at the current price. So Bitcoin at the moment is around 130 billion market capitalization, right? And when it was at 19, it was around 200 billion, 220 billion, I think. And that's roughly the sum of the market caps of Visa, MasterCard, and Western Union. Actually, it's about a third of the market caps of Visa, MasterCard, and Western Union. And so if you think that Bitcoin could handle a batch of transactions that's roughly a third of Visa, MasterCard, and Western Union, then that's not a crazy valuation. right? But the question is the time horizon. I don't know if I would go to say 2020, but it might happen sooner and it might happen later. It's very difficult to predict, right? At the moment, we're not predicting universal acceptance by 2020, right? We're predicting relatively small net.
So you were talking about regulations and stuff, and I know I was reading about how since regulations have gotten harder for, like, I think there's a lot of talks about regulations from the government, and also lots of companies like Google, Facebook, and YouTube have kind of blocked advertisements and like information passing about Bitcoin. What do you think that's going to be the effects for the demand and supply? Like, will that change the volatility?
Well, I'll answer the supply question first because that's the easiest.
Yeah.
Right? So the supply, it's on a predetermined trajectory, so it's going to have no effect on the supply.
Okay.
The demand side, a little trickier, right? On the one hand, so I would actually say that the regulatory environment, at least in the US, has gotten much clearer. And so even to the extent that there are more regulations on Bitcoin and Bitcoin services companies today, if you go back just a few years to, say, 2011, right, when people were talking about Bitcoin then, it was folks like Chuck Schumer who were saying things like, we should stamp out Bitcoin. And virtually no one is saying that in the US today. And so on the one hand, there's more regulation than there was just a few years ago. On the other hand, the scope of regulation seems to be much smaller than it was a few years ago. You have to register as a money services business. You have to pay capital gains taxes. But that's relatively small, you know, and by relatively, I mean by what could have happened to Bitcoin. Now, will that regulatory environment stay that way? It's hard to say. But in the US, at least, I think that seems reasonable.
So do you think if the government does put regulations, do you think they're going to back, we're talking about getting them to back up the fraud or just have a backed up plan? Do you think that's going to be possible, that the government's going to
Yeah, so the
get behind?
justifications are usually things like consumer protection, right? So fraud, theft, and certainly there is some grounds there for regulation, but to date, right, the U.S. government has been pretty reluctant to do that, and so that's where we are now.
If we look at the price of Bitcoin a year ago, it was under $1,000 or about $1,000. And in a very short, so for a while, the price has not been going anywhere, and then it went through the roof. How do we explain, or how do we understand the timing and the price of the timing of the price? So why did it skyrocket last year and not 2 years ago, not 5 years ago? And second question, can you comment on other cryptocurrencies and their relationship to Bitcoin?
Sure.
Bitcoin, are they tied to Bitcoin, and in what particular way?
Yeah, so the thing about the timing, so many of the price swings for Bitcoin are, you can link them to events that were happening at the time. For example, the China ban, and if we go back even further, the earlier announcement from China in 2012 that Chinese banks couldn't transfer Bitcoin, hold Bitcoin, or price assets linked to Bitcoin, price fluctuation there. There are clear links to comments made in the context of the scalability debate. So my colleague at AIER, Max Gulker, has gone through and linked a lot of those price swings to very obvious events. With that said, there are a handful of price swings that aren't easy to link to events. Partly what we've got going on here is arguably this network effects thing, right? That if we expect that there are going to be a lot of people in this market, then that is a source of fundamental value in the way that we wouldn't call that fundamental value if we were talking about other assets. Like, you know, just because a lot of people are going to buy oil doesn't make more oil fundamental value increase. But if a lot of people are joining the Bitcoin network, then that does increase the fundamental value of Bitcoin. And so we have this, this amplification issue here, that when people join the network, it encourages more people to join the network. And so what might look like a bubble, you could argue, is in fact just people joining the network.
Obviously, in the past 6 months, there's been a lot of kind of short-term speculation on the price of crypto in general. And people have been, I know you just addressed it, trying to link it to world events. But in the long term, based on like a lot of regulations that are coming up in developed countries, would you value it as something that is going to increase more steadily and kind of level off, or it's just completely unpredictable?
So my view, right, is that our best guess of Bitcoin's prospects is the current price of Bitcoin, right? And we can take a look at that relative to those other cryptocurrencies that you were asking about earlier. So for example, the top 10 cryptocurrencies that we have here. So Bitcoin at the top, Ethereum, which is a cryptocurrency that is especially useful for making smart contracts, that is contracts that execute themselves. So you might think maybe we want to have a contract where if the price of a barrel of oil hits, say, $90 a barrel on a particular market by a particular day, then I have to transfer a balance of Ether to Patrick, right? And so we could set up a smart contract, and if that event happens, the balance is transferred. Right? We don't have to go to a court or adjudicate this. He doesn't have to call me up and say, hey, did you see the price of oil hit $90 a barrel? No, it just happens, right? It's the contract executes itself. And so that's really Ethereum's value added. Ripple is a little peculiar for a cryptocurrency in the sense that it does rely on a trusted third party. Ripple is a company. And so they pre-mined a bunch of coins, and so there's, to some extent, you have to trust that Ripple is going to handle that position appropriately in a way that you don't have to think about a trusted third party when you're transacting with Bitcoin. But right, they have also created a solid reputation for themselves. So they've done things like hire Stanford economist Susan Athey to give them some credibility. Just for the record, anytime you're interested in boosting your reputation, you should hire some economists. It's sound advice. The more, the merrier. And so they've done that. So they've created a reputation in this space that they can be a trusted third party. Bitcoin Cash split off from Bitcoin late last summer. What happened was is that Bitcoin didn't look like it was going to solve this scalability problem. And so some of the folks in the Bitcoin community said, this is nonsense. We want to raise the block not just from 1 to 2 megabytes or 1 to effectively 1.8, which is what SegWit did, right? Instead, let's just raise it to 8 megabytes. And they couldn't get support for that in the Bitcoin community. And so they said, all right, we're going to take our toys and go home. Actually, what they said was, we're going to use the current Bitcoin blockchain to start a new cryptocurrency, Bitcoin Cash. So everyone who has a balance of Bitcoin, you now have an equivalent balance of Bitcoin Cash. And the big difference there is that the block size is limited to 8 megabytes. So no large transaction fees, no long queue of transactions. Now, this is one reason why it makes it really difficult to figure out what's going to happen to Bitcoin in the future. Not only are they not supported by governments, and we have to think about potential regulatory ambiguity and whether they'll solve this scalability problem, but they face some competition, right? And this competition, on the one hand, it lacks a first mover advantage. Right? We're here talking about Bitcoin. So if you're going to use a cryptocurrency today, you probably want to be in the one with the biggest network. And the one with the biggest network is Bitcoin. But they do have some second mover advantages. That is, they can look at what people complain about with respect to Bitcoin, and they can make some changes, offer a small deviation from Bitcoin in an alternative, and perhaps that will enable them to outcompete Bitcoin. So here's what I'll say about this in terms of making a prediction. It's a terrible idea to make predictions when we're talking about technological change. But if you were alive in the late 1990s, you could be very confident that search engines were going to be important in the future. Right? You're like trying to navigate the internet. It's really difficult. You need a search engine. But it would have been very difficult to predict that Google is the search engine we're going to end up with. Maybe Ask Jeeves or Yahoo or AltaVista or dozens of other search engines that you have never heard of before because, right, they didn't make it. We got kind of the same thing going on here. We can be really confident that this blockchain technology is new and interesting and it allows us to process transactions in a way that just wasn't possible a decade ago. But it might not be Bitcoin. Right? Maybe it'll be Ethereum or Ripple or some other cryptocurrency that we don't even know about yet. At the moment, the market is predicting it's going to be Bitcoin. But at the moment, there's still a lot of information out there that's not known. And so as that information becomes available, we'll revise our beliefs. These prices will change. But at the moment, this is where we are.
So I've read that the pre-programmed limit on Bitcoin is 21 million Bitcoin can exist.
Correct.
And people race to mine the ledger, so they are rewarded Bitcoin for doing so first.
That's right.
What are the theories on how Bitcoin will continue to have a blockchain ledger once there's no longer an incentive for people to contribute to the blockchain?
There will still be an incentive, it just won't be that built-in reward structure incentive. Although the supply stops growing at 21 million in the year 2140, the growth is really, really small a long time before that. And so what happens when we get to that point is that the system relies more on transaction fees, right? That is what people are willing to pay to make transactions with Bitcoin. And in fact, that's probably an even better system than we have now. So one of the big problems with Bitcoin, it uses a lot of electricity. And we can see why it uses a lot of electricity, right? So every 10 minutes, at the moment, 12.5 Bitcoin are going to be created. Right? Those 12.5 Bitcoin, they're worth about $7,000 a piece. And so we should expect, right, just ask yourself, how much would you be willing to bid for a $20 bill? Pretty close to $20, right? It's the same thing here. We got 12.5 Bitcoin. How much resources is the system going to be willing to spend in order to try and capture that 12.5 Bitcoin? Well, about 12.5 Bitcoin. And so as that reward gets smaller and smaller, right, and when it gets to zero, then the reward is just transaction fees. That is what people are willing to pay to make those transactions. And what they're willing to pay depends on their next best alternative. And so they're going to be willing to pay less than their next best alternative. And so that puts a cap on the reward. Now you might say, that's not much of an incentive, right? But remember that every 10 days, the computational problem gets easier or harder to make sure that a block of transactions gets processed roughly every 10 minutes. And so if the rewards, that is, if the fees that Bitcoin, that people are willing to pay to make transactions with Bitcoin is pretty small, then a lot of those miners exit the system. And the computational problem gets easier. But we get the same processing of transactions at a much lower resource cost. And so that's the long-run projection for Bitcoin.
So I wanted to ask you about some of the network effects. On my computer right now, I have Metcalfe's law pulled up, which states that the value of a telecommunication network is based on the number of users that it currently has. And online, what I've seen is that some people are also trying to use some technical or fundamental analysis on the price of Bitcoin for sort of the short term.
Yeah.
Do you think that any of the fundamental analysis techniques are useful in determining some of the value of Bitcoin, or is it more of an esoteric concept based on Metcalfe's law?
Well, I think that it can give us a sense of like range of plausible values, right? So, for example, if the price of Bitcoin was only warranted if it captured the population of the Earth times 12, right? If that's what the network size had to be to capture to make the price justifiable, then we would be pretty clear to say that that price is too high, right? And so we can use those metrics to get a sense of plausible values. And so that's why earlier I said, let's compare this to, say, the two biggest payment processors and the biggest remittances company, right? Is it so unreasonable to think that Bitcoin would capture a third of that market? That doesn't strike me as crazy, right? Maybe it'll never happen, right? But we can get a sense of whether it's plausible or not. And so we're doing the same thing here, right? What network size would you need to make this justifiable? Now, anytime you're making estimates like this, it's contingent on the assumptions you're making on how each of the individuals in that network are valuing the medium of exchange there. But certainly getting a sense of that network size is important for making plausible estimates.
Currency I use to pay for things, to buy things, to make my life better. Is there anything, if I bought a Bitcoin, I can use it for besides just leaving it in the computer as a series of numbers?
Well, you can use it to make transactions.
Such as?
Well, so I'll give you
Can
an
I go to
example.
Walmart and spend it?
Well, you could actually. So there are two things. One is that, as economists, we usually define money as a commonly accepted medium of exchange. Commonly there is probably less important than it has been in the past, because there are lots of intermediaries that will allow you to make payments at places that effectively accept Bitcoin without actually receiving it. So it's akin to if you take your US denominated debit card to, say, Germany, you purchase a cup of coffee, you swipe your card, you're paying in dollars, your bank converts that dollars to euros and pays the coffee shop. So the coffee shop effectively accepts dollars even though they never actually receive dollars. There are intermediaries in the Bitcoin space that do the same thing. So if you want to make payments with Bitcoin, you can get a Zappo card and go swipe it at Walmart, or you can log on to overstock.com and make a purchase, and Coinbase will intermediate that transaction. And so it's possible to spend Bitcoin at a lot of places that don't actually receive Bitcoin.
Out of curiosity, do people actually do that, or is that a
Yeah,
minuscule
absolutely.
part of?
Right? Those are viable businesses. Coinbase intermediating those transactions, Zappo intermediating those transactions. They're making money. And venture capitalists are doubling down on these things as well. I have a friend from China, and she was telling me that they have these Lay's potato chips there that they come in like Pringles cans, and they're crazy flavors, crazy to us, right? Well, I finally found someone who would be willing to sell this and ship it all the way to the US. And so I go to the website, I select a few not very tasty sounding cans of potato chips, and I get to checkout, and here are my options. Type in your credit card information into our webpage, trust us that that's secure, or we'll accept Bitcoin. And I thought, wow, I mean, I can really limit the scope of identity theft risk here just by making this transaction with Bitcoin. So I made the transaction with Bitcoin. That is, I purchased some Bitcoin, I sent it to the seller, and they sent me the goods. And so this seems like exactly the kind of situation where you would want a payment mechanism like Bitcoin. They can be very confident that once I send it, they're actually going to get it. Right? I can be confident that it's very secure because we're in a situation where I can't rely on the trusted third party, that is, whoever is behind this website to process the transaction. And so here we have a payment mechanism that gets around this problem. And without a payment mechanism like this, maybe I just wouldn't have made the transaction. Thank you very much.